Good morning, everyone. This is Anne Marie. Today's Tuesday, October the 16th, and we're looking at SPY here on the day. Very good movement here. Let's take a look at this, right? Here's the wave. Anytime we come up and test former resistance, it's very likely that we break that resistance. But if we come into higher lows and retest the resistance, it is also very likely that we break the resistance and it become new support. At the same time, when we break out of a very important level, we very nearly always, and that's a kind of a strong word in the market, always, we very nearly always come back to test the level. And here we came back just shy of it. Looks like maybe the baseline here gave us the low for the retest of that. Now there's always a troubling thing when we're here and there's a little space between that retest, but enthusiastic buyers sometimes do that and they help us on to the next space. As you know, I have been bullish on the overall formation, thinking that we're just pulling back and testing these particular regions. We came into 138, then to 127. Now we're testing the 100. We're at the space when there's going to be the choice, right? The rubber's really going to meet the road here. The breach of 144.54. And chances are extremely likely that we move up into the 146.30 area. Extremely likely. Maybe a little chatter at 145.57, but nothing really standing in the way. It may chop there a little, but pull back into a higher low. The goal is, of course, can we get over this moving average here that seems to be sitting in the way? And that is a little bit of congestion that is colliding with that average, so it makes it even more important. But as it goes, we should have an upside into 145.57 and then 146.31. Eventually, our target looking like 161. The 161.8 retracement event, which is 151.52. How long is that going to take? I don't know. If it looks like this, getting that way up there, it's going to take us 2 months. So, let's just be cautious about that and just see how it goes. Again, we have limited momentum in the market, meaning that our waves have gigantic retracement regions and then big pops up, and then they begin those large retracements again, and then more big pops up or big pops down. It's all the same when you're looking at lacking momentum. Okay? If indeed we come down and lose the 143 level, it should be that we come into this 142.21. There is an open gap still here. It's been filled only a little from open to close. There is something going on with the wick here. What is that high? 141.47. What's the low here? 141.77. So there's still a 30-cent gap here. Not a ton of movement. I mean, there's still gaps that are tiny, that are still down here that are open, right, which aren't very settling in the overall movement, but it is what it is. And so we could very well just leave that alone and go charging right up to here before we make our retracement. Okay? Good luck trading today. Again, watch these levels. They are clearly marked. The market is holding them very well. If it loses one and fails to recapture it on the next 3 to 4 candlesticks, it's probably going to the other, right? And by 3 to 4 candlesticks, of course, I'm talking about whether you trade the 5-minute, the 15-minute, things like that, not daily candlesticks like these. This action here still very negative, but we can see it lifting, right? We can see that upside momentum developing in the chart. All right, good luck trading today.